Tip number 2 to avoid a future volapocalypse: trade the weaker, less leveraged products. Don't forget that losses are always more costly to your fund than gains are beneficial. The larger the drawdown you suffer, the more exponentially large your future return has to be just to get back to break even. It is a little bit counterintuitive for people, but adding leverage doesn't always improve your performance. And in fact, in many cases, it will actually lower your rate of return. The SVIX is a -1 times short volatility ETF, essentially a replacement with the same leverage factor of the old XIV that was terminated in that single-day kill shot in February 2018 Volpocalypse. Then there's also the SVXY, which is deleveraged and just 0.5 times short volatility, so basically half of the SVIX. Now, given that the leverage factor is just half as much, I think most people will assume that the long-term rate of return is also about half. This is the SVIX performance dragged back to December 20th, 2005. It has an annualized rate of return of 10.18% with a maximum drawdown of 92.58%. This is the half-leveraged -0.5 times SVXY back to the same date in 2005. Oddly enough, though, SVXY has an annual return of 11.03% and a maximum drawdown of 71.99. Weird, right? Half the leverage, but better long-term performance. Again, though, this is happening because of those insane drawdowns. SVIX being faster moving just takes way too long to claw its way back from the gutter after a crash. Let me really drive the point home for you here and simulate a 1.5 times short volatility ETF. Surely adding that much leverage will improve the results, right? Well, I wish trading was that easy, but unfortunately no. The added leverage definitely helps in good times, but it leads to devastating drawdowns in bad times. -4.64% annualized with a maximum drawdown of 99.06. Clearly, the more leverage taken, the worse the results get. I personally use the -0.5 times SVXY within my tactical volatility strategy. Risk management is easily the most important aspect of successful long-term investing.